Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth analysis on ROKU, ticker ROKU. So to get straight into it, why are we doing an analysis on this today? Well, it was down quite a bit on Friday, being down a bit over 5%. Starbucks was down more, but I assumed more people would want to see a ROKU breakdown. So as always, we go on to a yearly chart. And we just see, is there any gaps that need to be filled? Because majority of gaps are filled, especially on these large cap stocks. But having a quick glance, there doesn't really seem to be anything that stands out too much. We had one here, but it's already been filled. And that'd probably be the only other one I'd be looking at around 420. So we can use that more of a target to the upside if we're looking for an upside target. And yes, there may be a few gaps within these areas here. But as I always say, I only like to use gaps that are very noticeable when you're just looking at the chart if you're not even looking for gap fills. And the reason I say that is because you tend to get more significant moves at that level, and just more of a reaction at that level, mainly because it stands out to more traders. If you're only looking for gap fills, obviously more will stand out to you, like this one obviously, even though it's been filled, but they don't tend to have as big as reaction unless they're very noticeable. And even though this one isn't massively noticeable, it's probably the most noticeable area on this whole kind of pullback location. So that's really the only level we're going to use as a price target on the gap fill side of things. Now we'll go over to the standard deviations and see where are our low risk buy zones, price targets, and maybe even shorting zones depending on how you trade. So coming down back into the 298 area, most likely we'll get another bounce here. As we expected, ROKU pulled back from that 490 high, came into our first deviation bounce and came into statistical mean. And that's why we always say we lock in some profit and move our stop when it comes into statistical mean. The reason being, when it comes into this statistical mean, you can never predict if it's going to go back up or continue up or fall back down. So it's usually a very safe bet to lock in some profits there at least, have a break even stop, and then if it does decide to pull back and break into a lower low, you're not going to be taking a loss on that trade. But as it's already touched that statistical mean, you can retrade this level. So when it comes back into 298, it's a relatively low risk long area. We have already broke the 315, which is the first deviation on the daily. However, we wouldn't have traded that properly because obviously it came in originally. It's got its bounce. Obviously that came into statistical mean in 4 hours, so you would have locked in some profits. And now it looks like it's going to continue down lower. So even if you did trade that 315 level originally, you shouldn't have taken a loss. Now it does look like if we're going to push lower, if we don't bounce at this 290 level and instead continue lower, what levels are we looking at? And that's right around 250, so 258, 253. And then obviously if it does push that tiny bit lower, you will have that psychological level at $250. So that's really the lowest I can see ROKU going for down, at least in the near future. But for if any reason it does continue lower, 210 to around $200 again is going to be that next low risk buy area. Now, where will we be looking to lock in profits? As always, for example, when it should bounce off this 298 level, when it comes into statistical mean or should come into statistical mean, again, lock in some profits and move your stop just so the trade doesn't turn into a loser or an unnecessary loser. Doesn't mean you have to lock in 100% or even 50%, but it's just usually a good idea to at least move your stop. And then where will our price targets be? 370 or 370 will be that next price target because that's statistical mean on the daily. So again, you may get that strong reaction coming into this level where it may pull back and continue lower. So if it comes into 370, again, a good area to maybe move your stop a bit more, and again lock in some profits. Then coming into 386, we're coming into that first deviation on the 4 hour. So once we start coming into these first deviations, it's a lot more probable that it can start pulling back. So it makes sense to definitely be locking in size as we touch that first deviation. And again, we got the first deviation on the daily at 430, so around that 420 to 430, so the gap fill and the first deviation. Again, an area to be locking in profits if you are still long. And really, that's all you really need to be looking at. Where these deviations are, depending on how you're locking in profits, you may be going for further and further targets. I personally lock in some at statistical mean, and then we'll look in a bit more at the next statistical mean, and then I'm usually all out by the kind of first deviation area, because I'm not looking to be in the trade forever. If I'm trying to be in and out with the trade within, you know, a week or a few weeks, usually locking in the profits at the first deviations is usually the place to be, because even if a stock's going to break out of this first deviation, it usually takes a while. It will usually come in, pull back to statistical mean, and then usually retest and break higher. So usually if I'm just trying to take the trade in a short amount of time and then find a new one, usually first deviation is the longest I'll hold it for. But if you are someone who's looking to hold in for longer, again, 430 will be the first deviation on the daily, and also the second deviation on the 4 hour. So that will probably be quite a significant level. Then 486, 474, and then 543, 520. Again, all these levels, depending on how you're looking to lock in profits, you may be taking different levels than me. And again, you can use these levels depending on how you trade as short levels. And by that I mean, for example, not the 370 because it's statistical mean, but any full deviation, so the first deviation on the daily or 4 hour. These are all levels which, if you are a short bias trader instead, you can short into these levels, and they are usually considered low risk short areas, just like we would go long as it comes into the first deviation, and it would be considered a low risk long area. So that's the overall breakdown on Roku. We don't really have an opinion on how high it will go, but do most likely see a bounce happening at 298, at least back to statistical mean, and if not, all the way down to kind of 250, and then expect the bounce there to probably around 350. So that's what I'm looking at on Roku. Hope you enjoyed the video, hope to see you in the next one, and that's it. Peace.
I wanna go, I wanna fly, I wanna take myself